Thanks for clicking. We had a big week in China news this week, with China's real estate sectors screeching to a halt. With multiple COVID lockdowns, defaults, and downgrades, China's real estate industry is continuing to deteriorate rapidly.
That's really great.
In addition to its real estate sector, China's economic outlook faced multiple downgrades this week from the IMF, Goldman Sachs, and Barclays, as we received new GDP data showing continual downturn in the Communist Party state. Finally, we're starting to get more information about the Canadian foreign buyers ban and how it will affect us vis-a-vis the real estate crisis in China. So what I want to do today is skip over Evergrande again.
Fine.
Go over the Chinese real estate data just released, go over what's going on with China's economy, and then finally look at Canada's foreign buyers ban and how it will affect us in the face of this Chinese real estate crisis. As we've talked about before on this channel, a slowdown in China, major economic problems in China, will affect us here in the West, here in Canada, here and in the United States. And we'll continue to have updates on China's real estate crisis and on their economy on this channel every Friday. If you want to get those updates, make sure you click like and subscribe. But for now, let's get into this real estate data. China's real estate sector has been pummeled as of late over the past couple of months, with multiple defaults, downgrades, with real estate developers having their shares suspended from trading, and we saw this week that the data is starting to show it. March real estate data coming out from China showed that sales had dropped by 29% since the same period a year ago. Not only had sales dropped by 29%, the bigger concern is that local government revenue dropped 27% during the same period. We've talked about before on this channel about local governments in China having $8 trillion in hidden debt that needs to be serviced. So a drop of 27% in their revenue is a big deal.
A lot of money.
Given that these local governments are already strapped for cash and under increasing pressure to lower tax rates and spend more, but they also have $8 trillion in debt to deal with, this could be a big problem should the real estate crisis continue. And I think this is a big problem brewing underneath the surface that we don't often hear about on the headlines. $8 trillion in debt is nothing to shake a stick at, and these local governments, so long as Beijing doesn't step in,
I will not enable you.
will need to service this debt. And local governments in China receive the majority of their income from local land sales. So, while this $8 trillion in debt may not have been a problem in the preceding few years when this debt was racked up, it could be a very big problem going forward as the real estate industry in China continues to fall. They continue to see their income drop in the hundreds of millions of dollars. So we could be seeing this be a big problem in the months and years ahead.
I don't like problems.
So we have a 29% drop in sales. We have a 27% drop in local revenue from those sales. And this is all data that we're getting that was occurring prior to the lockdowns in China. So there's definitely a lag there at work, and there's a good chance that as we're taping this video, do we still say taping? As we're recording this video, things have probably gotten worse. And real estate is by no means the only slump happening in China right now. We talked about a few months ago how China had dropped their GDP forecast, their GDP goal, down to 5.5%. At the time, we noted that this drop was significant as that's the lowest GDP goal set by China since 1991. And at the time, we thought this was a big recognition that China had understood there was definitely problems afoot, especially since China has been over the past 30 years accustomed to 10% year-over-year returns. News broke this week that China's first quarter GDP growth was 4.8%, and again, this was before the lockdowns. As a result, the IMF downgraded Chinese GDP forecast to 4.4%. And like we just talked about, the IMF is worried that prolonged problems in China, a prolonged downturn in China, could further expose structural weaknesses such as high local government liabilities, property developer leverage, household debt, and a fragile banking system. So, like we just talked about, when we have this downturn, it exposes bigger problems, like though that $8 trillion in liabilities in local government debts wasn't a problem when things are going great. Your credit cards aren't a problem when you're constantly getting raises. But as this downturn continues, that is going to leak into other parts of the economy and expose vulnerabilities in other parts of the economy as well. So while we thought it was a big deal a few months ago that China had lowered its forecast down to 5.5%, even though here in Canada we would love 5.5% GDP growth, it was a big deal at the time. Clearly, though, those projections, those hopes were a little overly ambitious. Finally, I want to briefly go over China's real estate crisis in the context of Canada's soon-to-be implemented foreign buyers ban. We had initially started following China's real estate crisis over concerns that either A, wealthy Chinese, understanding that their money was no longer safe in China, would flood Canada with their money, buy up Canadian real estate, and push our prices up. The other concern was that having to shore up their own finances in China, there could be a big sell-off of Chinese holdings of Canadian real estate, and that could flood our market with new properties and plummet our own real estate prices.
Yes, just do it already.
I understand, but we don't want it to plummet too much too fast. While it's definitely still possible that holders of Chinese real estate could flood our market with their properties as there's no ban on foreign buyers selling their properties in Canada, will the foreign buyers ban stop Chinese citizens, the wealthy Chinese, from buying up properties in Canada and further helping to push our prices up?
Probably not.
The ban on foreign buyers from buying Canadian real estate includes a number of loopholes which very well could be taken advantage of by wealthy Chinese. As a number of commentators have pointed out, the ban does not include a ban on permanent residents, foreign workers, or students. So there's nothing to stop wealthy Chinese citizens who have their students studying here in Canada from gifting them the money and those students using that money to buy up properties here in Canada. Andy Yan of Simon Fraser University, who we talked about a few weeks ago as he has been studying Chinese money flowing into Canada through the Bank of China, says that the ban itself has a lot of loopholes. It has a lot of openings through which I think doesn't necessarily deal with the issue of foreign capital, which is more of what is shaping real estate in Canada as opposed to foreigners. So I think the foreign buyers ban will marginally reduce the amount of capital flowing into Canada from foreign sources and pushing up demand for our real estate. I don't think it can really stop the amount of wealthy Chinese that could exit the Chinese market if they view their money as no longer safe. And we've already seen them move their money from China to Australia. We've seen them move their money out through the Bank of China. So I think that is still a remaining possibility in this Chinese real estate crisis. I think that the foreign buyers ban, like we said, will marginally help, but it's not going to stop the potential flood of money coming from China if things continue to deteriorate. With all of that said, this will largely be dependent on how Beijing is able to manage this crisis. We did receive more news this week of a triple R cut and Beijing thinking it's going to step in more and more into the economy. A lot of that remains to be seen, and they have been promising this for weeks. But we'll obviously have updates out on if and when Beijing does step into China's economy and how much they are able to actually affect change and turn around this real estate and a growing economic problem. If you want to get those updates, click like and subscribe, and thanks so much for watching.